To start off, can you explain out what is the Special Situations Fund?
Sure. The Special Situations Fund is an investment fund based in New York that has been around since the mid-1980s and invests completely in public companies with very, very small market caps. In other words, the very, very smallest publicly traded companies.
Can you also describe to me your activities here in Canada?
Well, we're invested in several dozen Canadian companies, and I also sit on the board of directors of a couple of Canadian companies as well.
They have similar things, like as if you were, executive boss.
Now, what can biotech companies do specifically to get on your radar? So how can they sell themselves better to attract financial investment from companies like you?
That's a good question. In our case, it's a double-edged sword. We look for, obviously, well-run companies that are developing valuable assets that address real needs in healthcare. On the same hand, since we're in the public markets, we're looking for companies that are really cheap. So the part about developing good products, being well-run, those are things that the companies want to strive for. Their stock prices being extremely low are things that they probably want to avoid. But that's the sweet spot that we work in. So as public investors, we want to buy really, really good assets, and we want to get them very cheaply.
Can you tell me how a company might better promote their product pipeline specifically to you?
Well, the best way is to, first is to run their company well. All companies have some investor relations strategy. We hear from so many. And the companies that are clearly making progress, that are being very specific in their progress, even to the way that the press releases are worded and the letters that they write to me are worded, we really read them. And the more general, the more vague, the more the substance seems to be buried deep inside, the less likely we are to pay attention. My universe is several thousand companies. So it takes we have to have very quick ways of dismissing certain companies. And when a company's making real, true progress, it's not difficult to very quickly summarize what that progress is. The harder I have to work to unearth the real value there, the more I tend to doubt that the value's there. And I'm very quick to jump to something else.
For detail and solidity?
Detail and specificity. We, unlike some of my colleagues in venture capital, who every company they look at, they have a team poring over with a fine-tooth comb. I'm a head of a very small team, and we tend to look for reasons to dismiss potential investments quickly, just to get onto those that we think we're more serious about. So the more concise the message, the better off the company does.
Can you tell me how you judge an investment opportunity? I think you touched on that just now, but can you elaborate a little more on what you look for when you're choosing?
Sure. Well, one is to make sure that the science and the medical background makes sense. I do have a background in science. I did practice medicine for the better part of 20 years. So there's what we call the so what test. Something may be interesting, but not really matter. And that's kind of the first screen. There's a term we have, which is the science project to viable company continuum. And everything in life science lives somewhere there. Our first screen is kind of two parts. One is what we call the so what test. We understand science, we understand medicine, and there are a lot of things that are being developed that really don't move the mark, that are particularly not necessarily very important, even if they're scientifically valid and can generate a positive p-value and maybe get an FDA approval. The second is a lot of the things that we are shown are brilliant science projects that don't necessarily have a place in the market. And we define a continuum between science project and viable company. And we're not funding science projects. We're looking for things that are really going to generate a return for our investors. So we start there. Then we move to management and how well the company is run. And finally, the kind of business nitty-gritty, the capital structure of the company, how much money the company needs to raise, how long that will take the company, how far out it will take the company, what type of value inflections we'll see during that time. And that pretty well sums it up.
What are the reasons why you might turn away from an opportunity?
Well, the primary one is we're just triaging our investable funds. Yeah, at any given time, I have between 20 and 40 investments. That means I'm turning down everything else. So we may turn down something that we like just because we have something we like more. And that's a nice high-level problem to have. Other times, we find that the business part of it just doesn't fit. Either the company doesn't have a capital structure that supports the type of spending that they need to do to bring about the value, or they have no means of raising the money. There are times when we don't necessarily see that the investment will be that much more attractive the next time money needs to be raised, and we're looking for other investors to join us. There are times we just don't believe what they're doing, or we think the clinical trial may be poorly designed. Because there are a lot of mix of technical and judgment questions that go into deciding what not to invest in.
Right then. And to follow up on that, what is the best way for biotech companies to access the decision makers?
Well, one is through someone who knows me. You know, certainly, whether it's a colleague of mine who's already invested in the company, much more used to talking to people like that. Certain of the better investor relations firms, but I have no problem with a CEO or high-ranking member of the company emailing me directly. Just very concisely spell, here's the investment proposition, here's what I'd like to get on your radar, here's why I'd like to talk to you. I don't like phone calls. I find it's very difficult to exchange information effectively on a telephone call. But email, we can choose to follow up that way, we can take our time to read it, I can read it again, ask for more follow-up, and that can be very effective way to do it.
That's more precise then. All right, then the last question is simply, what is your reason for attending BioFinance, and what do you hope to get out of the event today?
The reason's very easy. I love the Canadian life science industry. I think there's a tremendous amount of talent in here, developing some great stuff. We've invested very successfully out here. And I like the people. It's always a great trip.